Hi, I'm Mahesh Bhagwat, and with me is Samir Gilani, and we
Hello.
are partners at AMS Investments, which is a mutual fund distributor based out of India, and Samir is based out of Dubai. Today's topic will be our mistakes when we buy mutual funds, and
Correct.
Samir has his views on that, which he would like to talk about today.
Yeah, I want to keep this video quite short and crisp, Mahesh. So typically, a new mutual fund investor will log on to a website such as moneycontrol.com or some other website,
Yeah,
and he will look at the returns of the mutual funds and then sort them out in terms of the maximum return a fund has made in last 1 year, the maximum return it has made in last 2 years, and then basically pick a mutual fund. Now, typically, you will see in many cases that the returns you see in the last 1 2 years, especially in these last 5 years, they've been quite large, quite big.
yeah,
So people are expecting those kind of returns. So they're expecting their funds to give 25%, 30%.
yeah,
Some of them, some funds have shown 40% return in the last 1 year, right?
true.
Especially the small cap funds, right? So people are very excited about it. I like 40% is a lot of money, right? It's a lot
Yeah,
of returns. Then they go and buy those funds. This year also we'll make 40% returns. And that is where problems arise in the mutual fund investing space. Because what you see on these websites are something called point to point returns. They change daily. They will change on a daily basis as we go move forward, right? So it might appear to somebody that 40% returns have happened, but that's from one point to another point. So the investor who had invested at one point and is holding on till today would have experienced those returns. But that's not the case for all of us because we invest in different points in time. So I don't want to make it too complicated, but your expectations of mutual fund returns can only come from, at least in my opinion, from the past. Like what are the returns that mutual funds have given over a long period of time, which is 10 years, 15 years. You can expect those kind of returns. We are not here to forecast returns of mutual funds from here on. We are just trying to tell you these are the returns in the last 10 years. If all goes well, these should be probably replicate themselves over the next 10 15 years, right? So as a category of mutual funds, equity large cap mutual funds have historically given anywhere between 12 to 14% returns on average. Some have given more, some have given less, but as a category, it's that. Mid cap categories anywhere between 15 to 17% returns. Small cap category lately, because of the surge you've seen in small cap stocks, have given a 18 to 20% returns. These are the average returns that these funds have given in the last 10 years. So if you have any expectations about future returns, don't go by the 1 and 2 year returns that you see published on moneycontrol.com or these websites. Try and see that, look, in the long term, your expectation should be anywhere between 15 to 18% returns. If you
yeah,
have those returns expectations, you will be a happier investor. You will not get too discouraged because you have not gotten those returns that you had expected while you were looking at those moneycontrol.com numbers. So the point is to taper down your expectations and expect equity returns to be more sort of nominal and standardized
yeah,
over long periods of time, as opposed to looking at 1 or 2 year returns. Because we don't want you to look at 1 or 2 year returns because we don't expect you to invest for 1 or 2 years. We expect you to invest for 10, 15 years. Hopefully, the longer the better. And over those long term periods, your returns are more nominal, which is close to 14 to 18%, depending on the category that you have invested in. So that was the whole purpose of this video, to taper down your expectations. Don't just go by the last 1 year returns or 2 year returns of mutual funds. They are typically not what you should be expecting on the longer term picture of mutual funds. So look at the more historical returns to get a better sense of returns.
yep. This makes sense, Samir. Yeah.
Okay, if you have any other questions, please write to us at hello@amsinvestments.net and we'll be more than happy to answer any questions you'll have. Thank you for watching.
Thanks. Bye.